So over the last 3 weeks, I've been trying out day trading / swing trading, pretty much way outside my comfort zone. I've never done it. I've always knocked it, but I had some disposable income and I like to educate and I don't like to judge things before I try them. So I've been trying it and I got smacked. Trying to day trade a triple leveraged ETF in my first week of day trading / swing trading. I talked about it briefly on Brad Finn Live, which is the live stream I do every Sunday night. And I wanted to show you that clip because there is some education. I just went back and watched it again, and I really think there is some educational value there, especially if you're thinking about it or if you have been day trading. You can kind of give me some advice and your take. And also, like, I want to bring you along this journey because as the days go by, I'm getting smacked a little less. And we had like kind of a pullback over the last week, 2 weeks, which has made this even harder, but it's really been testing my patience. I want to show you this video and how I got smacked and the things that I learned so that if you're thinking about it or you're going to dive into swing trading and day trading, you can not do what I just did. And a typical example of trying to catch the falling knife. If you've been day trading a while, this is going to probably seem like a story you've heard from many different beginners. But let's dive into the clip, guys. And if you want more clips like this in the future, or if you want me to make more videos on trading, just leave them down in the comments below. It is kind of a pivot for my channel, so I would love to get your feedback. If it sucks and you don't want me to talk about it anymore, hey, let me know that too. But let's dive into the clip, guys. And next week, maybe won't get smacked this hard. Take it easy. Here's the TQQ that's not a bombshell just yet. I'm down a little bit, down 20%, but I made a much smarter play with this. Well, my wife thought this was like a revenge trade because she knew how pissed I was about TQQ getting slapped. Let's talk about this quick. I'll just pretty much show you what happened, like the long history. We'll go to the day chart and I'll show you why this was a good, or why I thought it was a good trade and why it was a bad trade for this. So here we were. It was supposed to be kind of like a day trade, almost a swing trade. And what I was trying to do was I saw this run up, right? And I knew that I was going to get some resistance. You can see this line I have at 180. So I saw this run up. I saw this momentum. And I thought just for a day after the break, I said, I saw this come down. I was like, it's going to go from here. It's going to come up to this resistance. That's why I made the trade. So I made the trade pretty much, this is at the end of 1-3. So when it opened here at 172 on the 4th, I made that trade. All I wanted, or all I was expecting, was that I wanted the MACD to continue up. We were still in a fair value of 56 on the RSI. I wanted it to get up to 180. That's all I wanted. What I didn't do was I didn't look at more long term and see that 180 was pretty much all-time highs. And that we were in a position where we should have been coming down to here. Like we were here. Why I thought we were more likely to come up to here than to pull back to here, I don't know. That's where I was wrong. And essentially, and I'll show you the trades, I got in, and let's just go to the 5 minute for that day. It's so brutal to look at. I literally got in, what time was it? 9:46 in the morning, okay. So on 11/4 at 9:46, I got in right here. And I was like, it's going to go up to 180. Wrong. The whole day. I caught the falling knife this whole day. I started averaging down, catching. This is the definition of trying to catch a falling knife. This day, the SPY was down. Everything was down. But I just got emotional. And I was like, it's got to come back up. And this was a 1 week expiration. So this was Monday. It was expiring on Friday the 7th. I'll catch it. By the time I got down to here, I was down, I think, $3,000. I got lucky when I saw this from 230 up to 330. There was a part of me that almost kept my shares, thinking that it was going to keep that trend up. And I said to myself, Brad, you got smoked. Sell off 3/4 of them, save face, and then maybe leave. Because I had 15 contracts. So I'm like, maybe just save 3 and see if you can save face and we can maybe break even. This dotted line I had drawn as my break even that day, roughly. Because that's kind of like when I averaged down. And good thing I didn't. Because if I would have held those overnight, this is where it opened the next day. And I would have lost $3,000. So what that looks like as a picture is I bought 4 at $290. Then I sold one back. I was like, sweet. So I made $8. But then it kept going down. I bought one at $260. I bought one at $250. I bought one at $230. I bought one at $212. I bought one at $202. I bought one at $185. I bought one at $159. Then I bought 5 at $60. It got all the way down to $60. My first trade at 9:30 in the morning was $290 a contract. Fast forward to 11:20 in the morning. So 2.5 hours later, it was down to $60. Smacked. It got up to like 76 at 3:30 and I sold 5 more. Then I sold at 3:48. I sold another 2 more for 92. So it started to climb. Then I sold another 2 for 96. And then it dropped back down. I got out. And then the rest I had to get rid of the next day. I got rid of them at 3 cents. So I sold these 2 and I got $6 back. At the end of the day, I ended up losing like $1,600, but I learned a lesson. Number 1, look at multiple time frames, you idiot. All I did was look, and not even look at multiple time frames. Look at like zoomed in. I mean, zoomed out. I was pretty much, when I made that trade, I was looking at this. I was looking at 5 days of data, 6 days of data. Don't do that, guys. Don't do that. Also, too, don't force stuff. I was getting excited. And I learned my lesson. Now, you're saying, okay, well, so then what the hell's with this one right here? So this I made on January 6th at 3:15 towards the end of the day. Look at where it is now on Friday. The worst in my eyes, and I could be wrong, the worst in my eyes, we come down to this 180-day MA. We can come down to here. Come down to 139. I made the expiration longer to give myself more time for things to go my way. And I waited till there was in a better position, and I didn't go that much. I think this is one contract. If this thing bounces and we get confirmation and the VWAP and everything starts to turn up, then maybe I'll buy. But this was just a dumb trade on my part, guys. This QQQ. But I learned a lesson. I really did. I did make a video last week on the indicators that I am using. If you want to check that one out, kind of get a bigger piece of what I'm talking about. I'll catch you guys on the next video.